I'm Charlotte McLeod with the Investing News Network, and here today with me is Frank Holmes, CEO and Chief Investment Officer of U.S. Global Investors. Thank you for being here online with me again today.
Happy New Year. It's good to be with you starting off 2022.
Yeah, great to be starting the year with you. This is my first interview of 2022, so hopefully it's going to be a good one that gets people excited about what's coming. I think before we jump into talking about the new year, we have to take a look back at 2021 and gold's performance over the course of the year. I think now that the year is over, we can say that it stayed fairly range bound, despite a lot of factors that people thought would push it higher. So to start off, do you think gold is at a fair price right now? And if not, what would you say is holding its back?
I definitely do not think it's at a fair price. I think it should be almost $1,000 higher if you looked at negative real interest rates and the incredible amount of money printing by the G7 of $20 trillion. So I that's much of my opinion, but I think it's important for investors to have what the crypto space does so well. Those Bitcoin fanatics always say, hold your Bitcoin. Don't try to trade it and sell it and guess high and low. Hold on for dear life. And I think that this would be something good for a lot of other companies, in particular the CEOs of gold producers, but individuals. The average gold price for the year is actually higher last year than the year before. Just a nudge. But everyone's so focused on the start price to the end price, and they define that as almost like a basketball game. It's not true. It's the accumulation of what is the average price. And that is how gold mining companies make their money. So I'll give you a great data point. This century, gold is outperformed 86% of the time. That's a real shocker. It's outperformed the S&P and by 225% this century. So not having a weighting gold is just flawed thinking. Gold is one of those great unique assets, but it's so caught up by just the daily price defining its existence. And that's what's flawed thinking.
Yeah, and these are data points that I think are so important for investors to keep in mind. We will look a bit at the price though, because I remember we've talked in the past about 2021, would the price reach a new all-time high? That didn't happen last year. Do you think 2022 is the year that we do see that happen? You mentioned the gold price should be about $1,000 higher in your opinion.
Well, one standard deviation for gold on a rolling 12-month period is around 20%. If we go back last year, it was off from start to beginning, not the average price, but just one linear line. It was off from 5%. The year before, it was up to 2 standard deviations. So to me, it's most interesting to see that that would mean gold can go, let's say, about $500 next year. And that would be a non-event for me to see gold appreciate $500. If it was to move $800 to $1,000, that would be a 2 standard deviation move. That happens every few years. So I remain very bullish on it. I think it's really important that the average price last year was actually slightly higher. And gold mining companies, I've tracked 100 gold producers for my GoAU ETF. And out of that, 61% of them have positive free cash flow. That to me is a big positive sign, because if you go back when we had negative average returns for gold, 2013, 14, and 15, there was only 3 companies that had positive free cash flow out of 100. Now we're talking about 61 companies. So I think it's really important to put that in that context, that the gold mining companies are much better shape. And I think that gold has, for whatever reason, has it been suppressed. I have my thoughts on that, because I've mentioned before that it appears the G7 finance ministers have created a cartel with the central bankers. And that shows up in particular with a flat tax of 15% amongst these different countries. So if you can organize a flat tax, therefore you can also organize money printing and money spending, and excessive money printing. The best way to show that's really not inflationary is say gold doesn't take off.
Yeah, so we do have a lot of things going on for gold. What catalysts will you be watching in 2022? What important things could potentially drive it higher, do you think?
I think the realization that all inflation is not going away. And I think right now we have this latest variant scare. So there's lockdowns. There's lockdowns in Canada again, and many other nations are doing lockdowns. And all that does is stifle the economy. That means more money printing. And I think that that's going to be that wake-up call. Rates aren't going to go up. We're going to live with negative interest rates. But whenever you have oil up, real estate up 23%, I know my healthcare insurance is up 23%. I know that my D&O insurance is up 50%. I can go on a list of things that are up dramatically. Copper prices, lumber prices, construction costs. So I think that we're going to see all of a sudden gold have that unique shine next year or this year.
This year, yeah, we're in 2022 now. So we have a good idea, I think, of things that could be driving gold higher, but I think it's also important to talk about things that could be headwinds for gold. So what do you think could be hurdles for gold in 2022, things that could set it back possibly?
Would be positive real interest rates. And right now we have negative real interest rates. And historically, back in 13, 14, and 15, we had positive real interest rates, and that it hurt the price of gold on a relative basis. But I think the government has been able to maintain this sort of inflation's only temporary story. I don't think that's going to go away. And if they really make the interest rates take off this year, which a lot of people are forecasting, then President Biden will lose Congress. And I don't think he wants to lose Congress to the Republicans. So having a very weak economy means that that swing voter that goes Democrat, Republican, Republican, Democrat would lose Congress. If they lost Congress, then there'd be gridlock in getting anything passed. So I think they're going to do everything to keep the money printing presses rolling, keep the economy alive as long as possible, and try to win control of the Senate and Congress.
Yeah, and that kind of ties into a question that I had for you, which is, one thing that we've seen get so much attention recently is the upward trajectory of the US markets. And I was going to ask you if you think we'll see that bubble burst or at least deflate a little bit in 2022. How do you feel about that?
Well, the person that's going to harm it the most is going to be the Elizabeth Warrens, who are anti the whole financial sector. They're anti-success. It doesn't matter that Elon Musk outed her, that she only paid 11 million. She's worth $11 million and paid $5,000 in taxes, and he paid 11 billion or more. But she's a very smart Harvard professor, taught law. She's a lawyer. She has very much a strong left-wing thought process, and loves to have policies that are, what I call them envy policies, against any type of form of success. So I think that people like her are very dangerous, along with AOCs that are allowed to run around Miami without masks on, but up in Brooklyn, they have a double standard. So that geopolitics stuff, that's not but that's domestic US, will play a role out in this year. So the headwinds are, does Elizabeth Warren get a real serious regulatory clout, which she's been pushing for?
Okay, now let's talk a little bit about the gold companies. You're starting to mention what's going on with them. How do you think investors should approach the gold stocks in 2022? What would be your advice there?
Well, a lot of them trade at PE ratios and cash flow multiples less than the stock market as a whole. And I think that that's really bizarre. Free cash flow companies should always trade at a premium. If you carved out gold mining and you just looked at the S&P 500 stocks that have free cash flow, these things trade at like 20 times. If you did that for gold mining companies, you have a much higher multiple. So I think that gold mining companies have to do two things in this, CEOs. If they have free cash flow, they have to explain better that they have this free cash flow and compare themselves to the overall market, that they're a better financial risk-adjusted return. And two, if they have free cash flow, they should take 10 to 20% of that free cash flow and hodl gold. If they want to get young investors like you, not me, they want to get young people that went into GameStop, etc., Well, and they've gone into crypto stocks. It's because they believe what they mine and they own it. And I think that gold mining companies started doing that with their free cash flow, and gold now jumps $400. Well, that mark to market on the balance sheet will make it even more profitable. So what you're seeing Michael Saylor's done with MicroStrategy, he cannot grow his business as fast as the money printing, so he's bet on Bitcoin. And so because he gets the mark to market each quarter, and he thinks Bitcoin's going to go to $500,000 a coin, then he's going to make a lot of money positioning in Bitcoin. Gold mining companies ought to take that page and use it for their own stocks, especially when they have free cash flow. I also think that this year you're going to see more takeovers, just like we saw the Great Bear being taken out at a 26% premium that ignited lots of interest. This is a stock that I remember 3 years ago, most people were non-believers. Once again, in a rich area where other high-grade gold mines are existing right now, in the Red Lake area, comes along and has a slew of these discoveries. I think these gold mining companies are going to have to acquire higher grade deposits. There's a lot more safety in investing in North America than it is taking place now in Latin America, because Latin America has swung to the left. You see what's happening in Chile, you're seeing what's happening in Peru, you're seeing what's happening. Worry is happening in Mexico, and the worry now is what could happen in Colombia. Guyana seems to be a great sort of more free market country in Latin America, but the rest of them have some real challenges. So that ounce of gold is much more valuable if it's in Canada than it is in a lot of Latin American countries. The safe one still, I would say, is Colombia, but we'll have big elections this year. We'll see how that pans out. No pun intended.
Okay, and when we look at this mergers and acquisition trend that may be continuing in 2022, do you see it at the level of companies coming in and looking for exploration stage entities like Great Bear? Is that the level that we might be seeing it at this coming year?
Yeah, it's amazing because they didn't have the detailed 43101 that was necessary. But any smart geo and engineer could have taken all the data that they made public and created a 3D model with graphics and AI today. It's very easy to do with machine learning that this asset's worth a lot more. I think we're going to see any junior mining company that has a high grade deposit that has length and depth to it, especially the length, is going to get picked off because these gold mining companies have to replace their production. And some of the safest places are also in West Africa, and they're also in North America, in particular Canada.
Okay, I think that gives investors hopefully a good idea of how they can approach gold in 2022. I want to take you now over to Bitcoin and Ethereum, which we know that you have involvement with due to HIVE blockchain. So let's take a look at what's going on there, what we could see coming, both from an investor interest perspective, what you see coming next year, and also in terms of prices, what we can expect.
Well, it seems to be consumed with sentiment of Bitcoin and Ethereum by quant funds. We see the prices go up and down and change by the minute with Bitcoin and Ethereum prices. What's important for investors is if you compare it to a gold mining company, we've actually spent very little bit of money in the context of making 50 million in a quarter. I mean, you'd have to spend a lot of money to be making $200 million a year. You'd have to spend billions of dollars. And we've not spent that to be able to get those types of returns. So I think that I'm very proud about HIVE because HIVE is so far, touch wood, is delivered the highest revenue per share against all the other crypto mining companies. And Matt Kaser in Canada, his organization does a quant approach. We have the highest returns on invested capital. So I'm thrilled about that. I think we're the most profitable company on the Vancouver Stock Exchange. And our run rate is going to, right now, even with the correction, is 250 million a year with the $170 million of Bitcoin Ethereum on our balance sheet. Any spike and surge in Bitcoin Ethereum, we are just going to, I see, double our production over the next year and then have the rising prices. So we're in a very much a sweet spot. We made several major acquisitions in Canada during COVID. We went first in 2020 in Quebec with Lachute. And then we built out last year in New Brunswick, and both as green energy, just like we have in Sweden. We're increasing our production by 50% in Sweden. And it's a big number that's taking place in New Brunswick. So it's very, very exciting for what HIVE is doing. But crypto is for millennials, and that's what you have to recognize. They can stomach the volatility. They can lose money. They're younger. I think the older investor is more keen of going into gold because it's less volatile as an alternative asset class. And it's like real estate. Any time it's done this and there's sustainable inflation, gold is that laggard that then spikes and takes off. So I'm thinking we're going to get that mean reversion this year. But when it comes to crypto is 7 times more volatile than gold on a daily basis. So investors have to really be sensitive of that. It's a disruptive. It has many applications to it. So we think that our data centers are going to be very important for the growth of the metaverse, the growth of DeFi, the growth of NFTs. So HIVE is making strategic investments in other companies, and in particular in Vancouver, with Network Media recently, because they're building out their studios into the NFT business. So we're very excited about those opportunities. And I think having a 3% weighting in crypto is probably a smart way. A lot of people will use HIVE rather than open at Coinbase and open an account directly. They use us as the proxy rather than want to have a wallet. They're always reading this negative narrative. So that's what we're in a sweet spot of positioning. And stay tuned because we have some really exciting numbers coming this year.
Okay, Frank, so I know that you watch quite a wide array of things going on in the market. So as we wrap up, I have some broad questions for you. If you look back at 2021, what would you say the top investment story for the year would be?
The global adoption of blockchain. And you don't get a lot of fanfare when IBM announces and the various companies announce what they're doing on the blockchain, because everyone's so consumed with the price action of Bitcoin, Ethereum. But that adoption is quite significant. And you can see it then when you look at PayPal, that you cannot buy my ETF on PayPal, but you can buy a fraction of a Bitcoin. And it's gone up dramatically over the year. And now you've taken a portion of those profits off and bought a new TV. Like you didn't go to the bank, you didn't go to a brokerage firm to do those trades, but you would have to do that if you want to buy a stock or an ETF. So I think that adoption of blockchain by the PayPals of the world and giving fractions is very significant. And the other part is the Ethereum ecosystem. Ethereum is the backbone of the blockchain for applications of everything. Stable contracts, so they're smart contracts. If you want a stable coin like JP Morgan has, backed by US dollars, if you want to have DeFi, if you're going to go to NFTs, which is a big rage, there's no doubt blockchain NFTs, you go from 100 million to $20 billion in 1 year. I mean, the numbers are all over the place, but they're exponential. It's a quantum leap in growth in the adoption of NFTs. So that's all to me relates to blockchain. And I think the other part was Ethereum mining going to proof of stake got delayed again. I listened to this story for 5 years, and I think we're going to have what they call lightning or second layer, which will facilitate cheaper transaction fees for Ethereum. But Ethereum is really key for all the growth of apps. And I think you're going to get these lightning networks that will be able to move things around at a cheaper price. Mining will still be there. The ecosystem is huge. You got 20 million people out there all over the world mining Ethereum. And I think it's important to recognize you've got gamers that when they go to bed, they turn off their game, but the machines are mining. They're running up the electricity bill of their parents, but they're looking to get a mine in Ethereum 1 to 2 coins a year is $48,000. So that's serious money for a young person. I met a young designer here for the city of San Antonio, and he told me that he mines when he goes to bed, and it gives him a coin and a half a year. And that's a lot of money for him. He upgrades all of his computers. So that ecosystem is so big globally. And I think that is one reason why it's just going to continue to grow. Technically, for Bitcoin, the biggest news is really China getting out of the business, blowing everyone out. Biggest beneficiary was Texas, the state of Texas, with all the sort of trapped energy and capacity for expanding solar energy and for natural gas and wind turbines. So I think that was a big, big shift so that more mining is actually be done in North America in the crypto space. And I think the adoption of electric cars continues to grow in a very fast manner.
Okay, absolutely. Those are all going to be important things to watch in 2022. And again, thinking broadly, not necessarily, oh.
The biggest challenge has been shipping. Shipping costs have gone through the roof for HIVE. We see it go up tenfold for air cargo. And shipping things by sea, they've gone up fivefold. And so we don't think it's just a bottleneck in LA. We think it's a global phenomena for many reasons, that global shipping is going to be a very attractive way. So my new product is going to be sea, S-E-A, and it's sea to sky, like the famous road in Vancouver to Whistler, but it's basically a portion of cargo airlines, and Canada has several great companies there, and 70% is going to be shipping cargo, because I believe we're going to have inflation for many years, and I believe that the bottlenecks are not going away. We saw there's so many regulations and rules of moving things around the world. It's just more expensive, and these guys have such pricing power. They're making a ton of money. So I think it's a very sustainable macro trend is global shipping.
Right. And this is exactly what I mean, thinking globally, thinking broadly, what would you say is going to be the top performing asset of 2022 if we can try to make that prediction?
Well, I think that rare earths and cobalt, anyone who comes with a cobalt discovery in North America will have a home run because there's such a shortage for it. I think for the growth of technology products, you do need magnets, and you do need for the cars, you need rare earths, and you need lithium. So if you're seeing that General Motors and Ford and everyone's pushing their own lithium battery cars, there's just not enough out there of lithium. So I think things like that trade much higher.
All right. And as we wrap up here, what would be your best advice for investors as we head into the new year?
Whatever your age is, put it in short-term, high-income earning assets or strong dividend-paying stocks. Speculate on the remaining portion. So if you're 70 years old, you should have nothing more than 30% in more speculative growth. 70% should be much more secure growth in dividend income. If you're 30 years old, you should invert that. It should be 70% tilt for the growth. Don't worry about the dividends. And the 30% could be having some cash and things of that nature. So I just think each year you go up, you should just rebalance that and always have that 10% weighting in gold and gold stocks. Rebalance that each year. And now having a 2 to 3% weighting in crypto, I think it's just wise.
Okay, perfect. I do love that advice because it's so easy to remember. Thank you so much for coming on to be the first interview of 2022, and Happy New Year.
Happy New Year, and wishing all your listeners an abundance of health. Most important is to have health and great fortune in 2022.
Thank you so much. Once again, I'm Charlotte McLeod with the Investing News Network, and this is Frank Holmes with US Global Investors.